It is April 12th, and this is the video log that takes 30,000 to a million. I never actually talk about this, but apparently I'm up to 102 subscribers, which is crazy. I only started really doing this because I wanted to keep a log of my progress. And if anybody wanted to share, that journey and come along and keep track with me of as to what's going on, of course, they're welcome to. Oh, give me one second. Let me turn off the fan. It's getting a little bit warmer, and maybe we'll improve the audio quality a little bit. So after I take you through what's happened in the account, we're gonna talk about how to sell call credit spreads. So yeah, we'll take a look. Here's the browser here. Oh, this is the all-time chart. Looks pretty nice, pretty aggressive. So if you notice, I'm sitting at an all-time high, but it's really not an all-time high. The all-time high was actually right here on April 10th in the morning, or the closing of April, yeah, I guess April 10th. Um, when my account reached $56,554. Right now, it's above that number, but I actually added $1,000. I just added for the first time in quite a while, ever since about, I want to say, August or September, maybe September, October, maybe last year is when I added money last. So most of these gains are actually natural, about 11, 12, 13,000, 12, 13, or 11 or 12,000 of them, of the dollars. If we scroll all the way back to the beginning of the account, you'll see how much money I've added total since I started that $30,000 thing. I've probably added about $13,000, and I'm sitting right now at 50, almost 57. So if you wanted to have a fair look at the valuation. As far as what happened today, nothing too exciting. Well, Uber is about to IPO, so that's kind of exciting. But as far as my account, I'm not buying it, by the way. As far as my account goes, I have a small loss on EXK, Apple, a small loss $25, Spotify gained $31, and I'll show you when we talk about the call credit spreads. I actually did it on Spotify, so I'll show you. I'll walk you through that. Then we have a bunch of other non-events. C-SPAN was up $26 or 0.9%, and you can see it's closing into that $10 mark. I actually have calls, so two of them sold against C-SPAN, so I'll only be left with 90 shares if they execute. Both of the calls are set to expire on May 17th, so if the price reaches $10 or above, I'll be forced to sell at $10 unless I trade the calls prior to that moment, which I probably won't. I'll just take the losses. If it goes over $10, it's fine. So we had C-SPAN, so a lot of my gains are capped here for C-SPAN. It's already been such a winning stock for me, and I've gotten a lot of dividends off of it, and also premium collected from call options. So if I sell it at 10, it'll still be a big win, even if it goes to 18 and then miss out like on 800 whatever $1,000 of gains. It's still been a really good trade for me, or a money generating asset rather. So we have the Russian market up a little bit. I've also sold call against the Russian market. We have a little bit of losses here on Wheaton Precious Metal, about $10. I tried to sell a call against Wheaton Precious Metal. I've been trying to sell a call against it for a long time, but there's just not enough liquidity to for me to be able to do that. There's not enough people participating in the market, not enough shares or option contracts being traded on the bid and ask spread. That's what liquidity means. So for those you don't know, so Cameco was down $38. Cameco is probably my all-time favorite company with EXK. Unfortunately, it's reached a point where I've sold two contracts against Cameco, so I have zero shares, even though I really like the company. I have zero shares if the price reaches over $12 on April 26th or May 3rd. But I'll be collecting, and I have collected plenty of money from selling put and call options for Cameco. If you notice over here, I have a total return of $180 for the 200 shares that I do own, but I've been trading it in and out for a long time now, over the last couple of years, and it's generated a lot of cash for me. It has been great. Let's see if we can see a cost average for the current 200 shares. It's 10.87. All right, so sitting pretty good with Cameco. I'm not crying about that position. Big events is what happened is Apple. I sold, even though it was a down day, somewhere over here towards the end of the day. I sold a kind of a long-term call option against Apple, but I was able to get a price that's pretty high. So I sold a call against my 100 shares. I have 101, but against 100 of them. I've sold a call option for 136, I think, dollars. It's 140 now, so I'm negative $4 on the trade, which is fine. But the call has a strike point of $212.50. So that means the price of Apple has to go over to that level by May 3rd if anything is going to happen with this option for me. So if the price reaches that point, I will be forced to sell my 100 shares for $212.50 each, even if the price is above that. So I'm betting basically that the price will not go above that price, and I'm getting paid $136 hopefully for my time and for owning the stock and for making that bet and for putting it up, for that risk, for that particular month of waiting, or a little bit less than a month, about 3 weeks. So that's what's happening there. I'll be collecting $136 if the price stays below $212.50. And that's the big event. And then, of course, I put on the big trade that we're going to be talking about in a second, right? So Spotify, what is a call credit spread? Well, the call credit spread it's a way for you to bet. It's a way for you to sell options and get the premium for selling an option and have the time work in your favor, right? You have, by selling an option, it's a depreciating asset. So over the period of time that you are making a trade with an option, time works either against or for you. So it's a way for you, even if you don't have the underlying option, you can go short, right? You can be bearish on an option like Spotify, for example, that I put the trade on for. You can have a negative outlook on it, at least on a specific price, and still take advantage of time decay, right? You don't have to purchase a put option in order to go short on Spotify. Like, I like Spotify, by the way. I like the company. I just don't think it's going to reach $149, right, by the end of next week. So I might be wrong about that, and I'll lose. But so the way it works is you don't need to have the underlying stock. All you need to do is have cash, and you can use as collateral a call option that you buy that's at a little lesser value. So you only have to put up a little bit of collateral in order to exercise that. All right, so what you do is you sell a call option, out of the money call option, and then you buy a call option that's further out of the money to help you with the collateral if you don't have the underlying stock. Okay, so let me show you how that translates into the website. So here's the trade. Okay, so it's a call credit spread. So basically have sold a 149 strike price call that expires on the 18th, and I've also bought a 150 strike price call option that expires at the same date. So you can see there's a difference in premium there. All right, so it's more likely for the price to hit 149 than it is 150, and so that's why this option is priced higher. And what's going to happen is, if both of these expire by the 18th, I will be collecting the difference in premium. All right, so which happens to be $15. Now these prices are going to gyrate. It's not always going to be $15, but that's kind of what my reward's going to be. I'm locked into this trade, right? So that's going to be my reward. So what's probably happened here is either one of the options went up $3 or the other one went down $3, and that's why the difference increase. So far I'm losing on the difference in premium by $3, right? The difference has widened. Usually the difference widens if the price of the underlying stock goes closer to the actual price. So that means Spotify probably had a run up near the end of the day. So let's see if we can go to Spotify and if we can identify it. And you can see that it had a run up but towards the end of the day. So that's why the spread between the two premiums widened. And so by me getting closer to that strike price of 149, it's looking more and more likely that I'll be losing my collateral. And my collateral though is only $100. As you can see here, cash collateral $100. Right? It's not that big. So I don't have to buy 100 shares of Spotify, which would be like, $15,000. I don't have to put up $14,500 in order to go short the very same stock I'm buying, right? It doesn't make much sense. So I'd rather put up cash, take advantage of time decay, and make sure that I benefit from that trade that way. So it's a really good way on Robinhood. You can't really naked short on Robinhood, which is fine, right? On other brokerage houses you can, but this is a way for you guys to go short and take advantage of time decay on a stock that you're bearish, your outlook's bearish on. So now, make sure that you do your own research and you don't just look at this video and be like, oh, well, I'm going to do this because, Sav's doing it. Like, make sure that you read up on it. And if, I'm not a financial advisor, so look one up if you want actual financial advice. I'm just some dude on a YouTube video. I'm a retail broker just like you, right? So perhaps I've been at it a little bit longer than you, but, make sure they don't look at my explanations as some kind of an expert, right? I'm just here on a journey to make $1 million. Hopefully you are too. I don't know why you'd be doing anything else. But I want to make the million on Robinhood. I have other accounts that are not shown here, so this isn't my only account. So if you think something's risky or experimental, like I'll be fine. Okay, if something goes wrong with this account. All right. So anyway, it's fun to see the subscriber number. I never expect people to subscribe for so many people, anyways, and to keep track of what I'm doing out here. So, but anyways, let me know how your journey is going. Like I'm always looking at other investors and how they're managing their portfolios and looking for ideas to what they're doing and what their numbers look like. So, comment on how you're doing and what your portfolio looks like, what your account is up to, and maybe we can share some ideas. All right. I think that's it for now. Peace out.